Good morning, everyone, and welcome to Nadex Morning Analysis on March 19th. My name is Todd Rich. I'm with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I look at a couple of hot spots in the markets today on a very quiet Friday this spring, I do need to share this disclaimer that trading on Nadex involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your educational purposes. All right, with that, Brian, do you have anything you want to be sharing right now?
No, nothing at all, Todd. No, I'm just kidding. Yeah. So
no, well, I don't know if you had you didn't have your have your charts up yet.
I was mesmerized by your voiceover voice.
There we go.
You'll be doing cartoons pretty soon. Disney programs, that kind of stuff.
I wouldn't mind doing that.
So far this morning, guys, all we really have is retail sales. Now, they were expected to be much more negative than they actually turned out to be. Previously, there was a few adjustments, one positive, one negative, but the actual was coming in at minus 1.2, minus 1.1 for core retail sales. Basically, all that's telling us. Oh wait, did I not share anything? My bad. Hold on.
Yeah, that's what I was talking. I got mine up there right now.
Man, it's Friday. I've only got. There you go. I got it in. I only got a quarter cup in. You can switch it back. Coffee, guys. It must. My wife must have switched the decaf in there on me. Anyway, back to the numbers that I was showing you again. The core retail sales were not as bad as expected, which is a positive note for the Canadian economy. Now, it is still considered negative, and people may be looking at the dollar CAD today and saying, hey, is that an opportunity? I would say right now, not so much. I mean, at this point, the data has already kind of been given there. It was already expected to be negative. It was negative, but less negative is still negative at the end of the day. So it's not really necessarily a trading opportunity. And right now, I mean, again, while that should be some CAD strength, the dollar is actually having strength more or less across the board. You can see the euro down, the pound dollar down, the Aussie dollar down, dollar CAD up, dollar Swiss up. Dollar yen's off by a little bit, but again, it's in the last hour, it's really been rallying back up again. So it's trying to put its work in for the day. As far as opportunities today, there's a few things to mention. I wouldn't say that today is like the AAA, setup type base day. Just fair balance with that one. Not every day is going to be a best day trading, but there's some things that we're looking at. Right now, this is the S&P 500 futures contract. One thing of note, you can see right down here around about 2 o'clock in the morning today, the Europeans once again stepped in and helped stabilize this kind of drop. And again, it did take a bounce off that 3,900. I think 3,900 is an important level to watch out for because it is a psychological level ending in 00. Levels, again, that we've seen this morning, and the way that I typically tell people to trade it is a drop down to a 15-minute chart. Before I drop down, because they're going to lose some of the view back here, but there's a little bit of a basing and then kind of a retest this morning around 6:30 a.m. at 39.2350. And why this is significant is not so much the wall that it ran into, but if we look back, the last time we had a nice spike just also happened to be 39.2350. So it is a level that people have used in the past. Again, we always got to kind of watch out for those. But if we drop it down to a 15-minute chart, this is kind of what I'm looking at right now as far as the S&P goes. Again, that 3,900 is down here. It got front run right here, missed it by 25 cents. So again, we could count that as a hit. And then again, at 2:15 this morning, we had a big drop in there for the European Open, to kind of really take this, much, much higher. So 2350 is an important level. We can kind of see where we run up to before the Open in 40 minutes. It is a potential short area. I would say it's not necessarily a horrible short. We did have a very, very fast run up, and then at 5 o'clock, we started kind of having some fighting going on back and forth. But it could be a potential short area to go lower, as well as if we look to the left, we can see that this is pretty much a racetrack over here. There's a little bit of a hiccup right past this, but remember, in any Harry Potter trade, we're looking for prices to kind of blow through a level, pull back to that same level, and kind of stabilize itself, right? And then we're looking for a punch higher. So there could be a potential breakout of this one higher. And again, as I mentioned on other Fridays, it is Friday. There is that Feel Good Friday.
Feel Good Friday.
Yeah. And it's a real thing, it happens, But again, this could be the potential kind of risk level that we're setting to go a little bit higher, maybe up into the 39.44. But the last time we have confirmed sellers up top is 39.50.50. Again, 5.0 is also a psychological level. The 50.50 is a psychological level. To watch out for. We may have a little bit of a hiccup at the 39.50 flat. But again, psychological level, it was tested on a 15-minute chart as well as the 30, so it's one we should watch out for. But I think as far as the S&P goes, those are things to look out for. Right now, if the open was in 10 minutes, I'd want it to move just a little bit more, and I'd be looking for shorts at the open based off the 15. But I do think if we can get a little bit of a tick up, I think we could have a Harry Potter to go higher to kind of approach that 39.50 later in the day.
Yep. So I do like to put this up on the Nadex platform, and I should put up that 39.50 level. Let me draw that in real quickly, just so people can see how I'm doing this. And I am gonna, and you can see where that 39.50 level is. Yeah, you've got this this level below the 3900 clearly being defended. It's been being defended for a while. Up above is where you'll start seeing sellers come in, and I'm just going to zoom a little bit in here where you can see there are a variety of binary options. So if the S&P starts moving around and you're looking for a punch higher, being able to grab one of these on the upside could be in there. I'm even going to zoom in a little bit more. As it starts punching higher, there might be something that you might want to grab. In the binary options, if it starts, if we do get our Feel Good Friday going on, so never know. You got to keep your eyes on it. All right, let's do one other market quickly.
I would say gold, just because it's been such
Perfect.
a big mover and everything with interest rates. Also a bit of a warning for Monday morning also coincides with gold. So we're kind of sitting here right now. We've had a little bit of a kind of a bounce again off that 5 o'clock window today. As you can see, a level we talked about yesterday was this kind of the black kind of dashed line. This level actually did. I mean, you look at the price, like, oh, it blew right through, right? It ended up hitting once and bouncing, hitting once again, bouncing, hitting a third time, bouncing, and then number 4 actually broke through. I don't know if you can see it any better here on the 15-minute. Yeah, you can kind of see it where it hit, and then finally broke through. Again, remember, levels don't last forever, and then we need to look for the next lower, which was what brought me up to the 30-minute chart. So you can see here was the next level where we really had some decent buyers, and again, it was the pattern that I mentioned yesterday where you have wicks that are or they're going higher, 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 or in the opposite direction going lower, 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 kind of like almost like a sawtooth, right? One of those big old-fashioned saws. That ended up being where we're stopping. But you can see, even though those previous buyers finally broke, when it came back to the top, what happened the next time? They came back in, and we saw a big rally off of that in price. So that's just a level to watch out for in gold today. Coming in here right around 1727. I would say right now this is also kind of in a similar situation, although it's boxed in a little bit more. But really the two levels that I would focus on as far as high quality levels in this one right now would most likely be this the 1752. And if I had to draw kind of a box like curve-wise today where I expect the range would be, it would be kind of inside of this blue box right here, right? Again, decent sellers. This was a very, very strong push coming in here at 1750.68. So again, 1752 would be an area to kind of trick some of the support and resistance traders for a rollback down. Vice versa, if price comes down to this level at 1727, could be another level. If not, the 1719 down below that is, again, it's a Tesla level at this point. But I think that's pretty much our range, 1756 to 1716 today. If I had to take a pick right now, though, I'd say probably looks like it's going to be negative off the open. But I will say that there are some buyers sitting right there that we need to watch out for at approximately 1732.
Yeah. So gold is one of these ones where I think we're going to be seeing it moving around. I think it's going to be a hot spot for a little while, namely because what's in the news now and probably will be for the next few months is everybody looking at interest rates and everybody looking at the inflation numbers. The Fed's broadcasting that. I mean, there's two things that really work for and against gold at the same time. So you've got these people battling it out. When interest rates start going higher, gold is not a performing asset in as much as it's not giving you any type of return. There's no dividend from gold. And there's no income stream coming off of that. So a lot of folks, when interest rates start going higher, they want to be in something that's going to give them some type of return. And so that, and then you also have to store gold. If you actually have physical gold, you have to pay to store it. So
You can put it
in
at my
higher
house.
interest rates, right? Higher interest rates hurt the value of gold, but then at the same token, we've got this inflation, and inflation is something that helps the price of gold. So you really see gold getting a bit of some volatility. Definitely a hot spot to be looking at. We've had these levels right here in the middle where we've channeled through and broken out, that Brian has talked about before. But if we punch higher, we got that 1750 above. And if we were to break down, and you just never know when gold does that, looking at, down closer to 1700, below. So just something to be looking at. Definitely some hot spots. Binary options, again, a great way to play this if gold starts making a move one way or the other. With that, Brian, is there anything else you want to just share quickly before we call it a day?
One last thing I would say as far as gold goes, you can see right now the IG consumer sentiment is 83% of people are net long. Actually, their headline article right now is an article about how gold is battling with resistance. Sentiment remains bearish. Gold may struggle to break chart resistance as U.S. Treasury yields are set to push higher, weighing on the value of the precious metal. So if you guys are looking for a new market to trade, there's actually, again, interesting article on Daily FX. Get up there. Check it out. They got some interesting levels in here and some, again, a little bit of chart analysis is a little different than mine, but again, the what they're talking about short and midterm, again, great place for you guys to educate yourself on a day that we don't have a lot of trading. One last thing that I would definitely talk about as well, and again, I'll leave you guys with this. Fed Chair Powell is speaking at 9 a.m. on Monday morning.
Yep.
Yeah, so just remember, as soon as we go live, he'll be talking. We'll probably be playing a little bit of a catch-up on Monday morning. And again, what a way to start off Monday morning trading inside of the markets with Powell speaking. And again, the things that will come up are recovery, interest rates, stimulus, everything that makes the market crazy. So it could be a pretty crazy Monday with lack of any other news besides what Powell says.
So get your rest over the weekend. Even though Friday might be quiet, we might, have some action Monday morning, which is a perfect segue into, if you got any questions for Nadex, please email us, customerservice@nadex.com. Brian, also very accessible. You can email him, support@keeptradingsimple.com. So please, we're here to help. One way for you to do that is to reach out to us. Gave you a couple of hot spots in the market, S&P and gold, a couple of places to be looking for our Feel Good Friday. And with that, Brian and I will be back Monday morning. So hope you all enjoy your weekend. We will be back Monday morning before Powell speaks, so we can discuss what's going on then. So hopefully we catch you again Monday morning, and want to wish you all good luck in the market. Oh, and we're always at 8:45 a.m. Eastern. 8:45 a.m. Eastern every day is when we start, just so we're clear. All right. With that, thanks everyone. Good luck, and we'll catch you on Monday.